Hello. How's everybody doing? So I hope everybody's having an awesome weekend. This is 50 pips rocking and a rolling here. So we're doing a little update for the week to come, 8th of March. 2015, as usual, we're not making any trade calls or recommendations as you and only your response for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers here on the website and on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on in the week ahead? Now, we've just come off a very busy week, right? So to a certain extent, we'll have to see if the market needs a bit of room to settle down and breathe. But really, going into the week, of course, the focus is going to be, what's happening on the dollar strength, right? It's all about dollar strength. On Monday, we don't have any particularly big data coming out, but we do have those Eurogroup meetings all day. Then going into Tuesday, we've got some data out of China, some data out of Australia, and we do have Carney speaking. Again, we have ECOFIN meetings going on, so that we could potentially have tape bombs out of that. Going into Wednesday, we've got a lot of more China data, a lot of China data out this week. We've got Draghi speaking, we've got man production out of the UK, and it's pretty much it's the first day where we've got something bigger hitting the wires. We got that official rate decision out of New Zealand, so a lot of people looking very closely at that, because that will likely be the next catalyst for the move on Kiwi. Then Thursday, we've got that unemployment change out of the Australia. That'll be a big mover most likely in the overnight session. We got unemployment core retail sales out of the US, Carney speaking. And then on Friday, we've got that CAD unemployment data, unemployment rate, and that's going to be very interesting, because if anything, clearly there's potential for CAD to break out of this bigger range we've been trading in, right? So looking at the charts, what's going on? So if you look at the ES, right, basically we talked about the fact that it was trading in this broader range, and was still holding some kind of a bid tone, and that we felt that even though it would be healthy to see a correction, this could remain irrational, this could remain bid longer than most people can stay solvent. But we're looking at failures at highs, right, to get tactically short. So you see here, we came back in, we put in a nice 1 hour reversal, not a pure play, but got a little 1 hour reversal, and then we start to get this weakness forming here, and then it just started to let go, right? So we had a first attempt of the bulls to try and catch this, so previous resistance acting as support, and now it's holding fairly heavy, right? So what I would look at going into the week, now the way this closed, you would expect to see the market try to press lower into the open, so it's clearly going to be a very interesting week, right? Going into the week, feeling heavy, right? But keep in mind that this could still correct quite a lot and still be an upside rotation. But right here, what I would be focused on is, how we behave around these 2075s, right? If the market cannot get any traction below these 2075s and we start to hold back above, then we could easily continue the rotation higher. But if you look at the DAX, look at the NASDAQ, etc., it's starting to look like we could see a more decent correction here. In terms of this chart, I'd still use all the levels we've got in as pivotal levels, bull bear lines for the day. But clearly, we could see a move back into this whole mid-range, back into the 2025s. But keep in mind that from a bigger term perspective, right, as we're pressing these highs, this is another chart we had up on a blog, right? This is just a very minor correction, right? If we're still looking for 5-10% correction, decent correction, we could easily start coming back all the way closer into that 100 and 200 moving averages on the daily. So again, the focus on the week is right here, where we're breaking, where we talked about, globally speaking, this whole 2080s moving into those 75s, right? And as long as we hold below there, then the bears still have a pretty good chance at keeping the pressure on, trying to get a move all the way back down into these lower levels. And again, it still wouldn't be a crazy correction to see price trade back into the 2020s or even into the 2000 level. So let's see how this behaves here, but clearly potential for some more downside action going into the week. What's going on gold? Gold, we're hovering here, and again, we looked at this, we're talking through this live, right? The break back below those lows Most people just trying to sell that break aggressively to look for a move back into 1150s, new lows to print here. In terms of the metals, I prefer silver. It looks like it's a lot more supportive than gold here. And right now, what we discussed basically that we were hovering around this mid-range, and these 1200, 1198 was mid-range, bullish above, bearish below. And now the break and hold below clearly is calling for these 1150. So going into this week for us, the 1150 is base support going into the week, right? And I think that as long as price can hold above, we could see some choppy action, some kind of consolidation here in what we would essentially call the mid-range. But if we get any daily closes below the 1150 this week, then I would expect that 1100 to come into play fairly quickly. But again, we'll have to see how the market stabilizes. We'll have to see how the USD stabilizes, what happens going into the week. But clearly pressure is on gold here. Now, talking about that pressure on, if you look at the, well, actually, let's do crude. So and crude, we talked about the fact that basing is a process, right? And it's going to take a lot of time. And we'd expect this to be hovering around in this whole 55, 45, this $10 range for a couple of months, possibly even quarters, right? It'll take some time for this to base. Our outlook still remains the same, that it looks like it's trying to find some kind of an intermediate term base. So no real change on the chart. 50 mark, pivotal bull bear line for the day, every single day going into the week, bullish above, bearish below, in a sideways chop range. 55s to the upside, 45s to the downside. Unless we get daily closes outside of this 55, 45 range, again, I don't think there's there's an awful lot to do, much to do about nothing. It's still some kind of a basing process, okay? What's going on euro? So euro, again, major mover here. We talked about the fact that below those 1220s, it was heavy, and the focus was the gap down, the move down on that Greek election, which we thought was basically the stage for an intermediate bottom, for a little bounce, for a decent bounce, right, actually, and possibly back into the 116s. Obviously, that did not materialize as we continued to hold heavy below the 1220s. And, we said once we break that 110 90s, as far as we're concerned, the next level to the downside is in the 7s. Now, I just put this up because a lot of people seem to be enamored. A lot of people seem to be excited with the 110. I'm not too interested in the 110 personally. The way I'm looking at this here is, again, as long as we don't regain those 1090s back above there, this is clearly going to trade with pressure on. And then next level we have to the downside is the 10740s. You can call it 10750s. From a shorter term, what I think is going to be interesting is if you go back on the daily. Now, again, if I remember correctly, when we had the ECB meeting, right, what happened is we had that little spike, wheeling and dealing spike. Yeah, that's exactly it. That's the spike when we start to see the changes of the forecast, right? And everybody started to think buy euro. And then when we saw that they were basically going to buy, negative yielding bonds, etc., got the smackdown again. So this is the key level to watch for me, right? The spike high where you saw those sellers coming in, right? We might, if we see some kind of a relief rally, if we see some kinds of shorts covering, this is going to be the big test, right? Unless we can get a daily close above this level here, this is still going to trade very heavy. And even if we get a daily close back above this level, what I would want to see for the, for me to call a real momentum change, right, for this downside momentum to really shift, I would have to see us go all the way back above those 11220s, which is the level we started talking about, right? So those are the two levels to watch to the upside if it gets any kind of traction, right? And if you go back on something like this daily, you see here, that's, what is it, 107, we have 107.70s here. Basically, it's this little dip here. That's the next level, right? We start to trade below there, then there's very little to the downside. You can easily see this accelerating very, very aggressively back into the 03s. Oh, you know, and everybody's going to be calling slightly different levels. The bottom line is, I think the key message is, after those 107s, there's not an awful lot, right? There's not an awful lot. I mean, you can start to look to the left of the chart, and you can see, you know, this is, we got little buyers coming in here, little support, but you know, maybe you can find some kind here, but there's not an awful lot until you get all the way back down into this whole parity. You know, some people are going to be talking about levels around here, the 102s, 103s, but really there's not an awful lot here. So I think the real key is going to be how we trade going into Monday. If we keep pressure on, if we get any kind of headline risk out of this Eurogroup meeting, any kind of tape bombs hitting the wires, let's see what happens. Clearly pressure on going in on the week. Now, a couple of other interesting charts is, again, you know, yen, not an awful lot. We're just saying, we keep on saying we don't want to fight this. We think this is going higher, so no change. You see this continues to break higher, but globally speaking, we're still inside this blue shaded area chop zone. Why is that 121.70s, 121.80s? Why is that so important to us? Well, not only because we've got a lot of chop inside that range, but that essentially is what we look at as the line in the sand for daily closes above there to really potentially start to open up a very aggressive move, potentially all the way back up into the 132s. So that's clearly something to keep an eye out for the week. And you see, you know, in terms of yen, there's pretty interesting action across the board. You can see this GPB, JPY is at a very, very clear level, very important level, got bought again. You know, we'd kind of call this a bit of a mid-range here, but very interesting bull bear line as we go into the week for a move back into the 189s or potential aggressive move back into the 175. So clearly a very interesting bull bear line here. If you look at something like EJ also, right, EJ holding extremely heavy. You know, we talked about the fact that we had this zone, and we talked about it chopping as long as it stayed inside the shaded area. If we said what we need to see is weekly closes outside of this area, and then you'll likely see aggressive momentum coming in. And you see here we start to move outside, and bam. So 130s to the downside. I think this is the next big bull bear line. Everybody's going to be looking at this very, very aggressively, right? If we bounce, if we catch bids here, if we find some profit taking here, we could potentially move all the way back into the 134s. But if we start to break down, it's could potentially start to look very, very heavy. You know, this was supported during the NFP on Friday simply because USD JPY likely was getting a very, very aggressive bid, right? The other thing to keep in mind here is that the monthly is really interesting, right? Because you see what's the tricky thing for me, and that's why I was saying, you know, I think the 130 is important, but caution from the bigger picture for the bigger swingers, because there's a lot of support here. Okay, these two moving averages, the 100, the 200, they're starting to flatten out a bit, but there's a lot of support here. So I would expect to see very, very choppy action here, right? And, you know, if anything, if I had to get aggressively short euro, I wouldn't want to do it against pointing on aggressive yen strength, right? This is clearly the last pair I'd want to express that view through. So we'll have to see what's happening. AUD NZD, as we always say, we like to get long into support, short into resistance. We don't like getting long or short in front of brick walls. And here we said, you know, this is a major low here that had been set, and the market was trying to break, right? And what we said is, you know, if anything, you're looking for potential bounces, or if you uber bearish, you wait for the break, but you don't start to get short right ahead of the level, right in front of that brick wall. So we got a very decent bounce here. I don't think the situation has really changed. I think the bears are still looking for any kind of bounce to smack it down, you know, anything even back into here to play this for the downside. I think it's going to be an interesting week because we've got that data coming out of Australia, and we've got the rate decision out of New Zealand. So that should probably seal this in terms of, you know, intermediate term kind of action. We'll probably see what's going on here, but right now it still looks like it's trying to hold that base. So fairly decent action. And since we're talking about AUD NZD, what's going on with Kiwi? So Kiwi gets smacked down right at the 76 level, right? We were looking for we were swing longs here, looking for this to break, and we said, you know, you have to respect the 76. The market came in, smacked this down the first time. We'd expect to be lower odds setup here the second time, but clearly you had to respect the trend. You have to respect the 76.00. You have to get daily closes back above to get the next aggressive move. And here, essentially, you know, when the RBNZ came out, you know, all that talk, you know, effectively the big question is, have they just essentially put in a cap, or at least capped it hard until the rate decision this week? So right now, you know, the big fight is going to be, you know, are we going to get any more traction to the downside pre the rate decision? Are we going to try and stabilize inside this chop range? But it's really all about that rate decision and a lot of choppy action here. Clearly, if the RBNZ keeps on smacking this down, you know, those lows will come into play. But if not, it's still a lot of chop inside this area. I think, you know, pretty much in some kind of a mid-range here. There's a lot more edge at highs or at lows than right here in this kind of mid area going into the week. And since we talked about that, let's look at Aussie. What's going on Aussie? Well, Aussie, broadly speaking, it's still in a massive chop zone, right? It's really, you're seeing a lot of choppy action here. You can see this even better on the daily. So I think much to do about nothing. The shorts have made their bed. The longs have made their beds. I don't think there's any reason, if you're swing short, if you're structurally short on this, to change your mind unless this trades back above the 80 mark on the daily, right? If you're structurally long, looking for a base, looking at that weekly or looking at this monthly for bounce action and thinking you're looking for some kind of healthy move to the upside, there's very little reason to change your mind unless this starts to trade back below the 76.20s. So as far as we're concerned, there's very little edge trying to play tight here, you know, unless you're trying to play some intraday moves. But in terms of the bigger picture, nothing's really going to change, or the outlook is going to be much difficult, you know, not as clear until we break outside of this range, because we could easily formulate a fairly articulate case for both the long side and the down and the short side, both for a trend play continuation or for a counter trend, some kind of bottom here. So I think we just need to be patient here. What else have we looked at? You know, Euro GBP is still very heavy, no big change. You know, we've been uber bearish on that, so keep on smackdown, fairly decent action. CAD, you know, we're still inside the zone, and what we, you know, we have to repeat what we're saying is there's really not a lot of edge playing inside this range. Again, in terms of structural moves, and as we're, you know, we do these updates, and, you know, we're doing weekly updates, so we're not going to talk too much about the intra-week action, because we want to make sure that the update is, you know, is a bit more useful, you know, it's not out of date by Monday or Tuesday. So right here we're still inside the range. I think you can make a case for the long side and the short side. A lot of people will be looking at that data coming out on during this week, the Thursday, Friday data coming out, and personally I think most of the things I've seen, or a lot of people think it would, I think the longs to a certain extent think it's going to be very, very easy to get all the way to the 130s, and I think the shorts are saying, oh, it's super easy to get to the 121s. I don't think either of those moves are going to be easy. I think there's still a lot of chop, there's still a lot of wheeling and dealing going on, and I think these two support and resistance areas are still going to areas that need to be reckoned with and need to be respected. So again, we feel in terms of trades, the edge is at the extremes. We are at extremes, but still chopping. But we'll most likely see some kind of resolution, or at least I think we'd hope to see some kind of resolution for the end of this week. And last but not least, what's going on cable? So cable, very aggressive sell-off on cable, completely and utterly in trend, right? So what we said is, again, we were holding swing longs off that 150 mark all the way back up into those highs, right? And basically what we're saying is, you know, swing longs in play unless we completely Sorry, I hope I managed to mute that. I needed to sneeze. So basically, what we're saying is the swing longs were in play as an aggressive swing long unless the market broke down below the 153 mark, right? And once it's broke below the 153 mark, then very, very heavy, right? So the sell is pretty pure, right? In terms of market rotating all the way back up into previous support, which is acting as resistance. Nice little short zone with very, very tight stops. The 100-day moving average providing confluence. So a very nice trade. You can make an argument both alongside long and short side. Now we've broken down. It looks like, market wants to retest these lows. So this is really going to be the key. Now, a lot of people asking me, about more of a fundamental view on cable. I think here is just more of a dollar reaction rather than a GPB reaction, because I think all the people who are structurally long on cable in terms of the interest rate outlook, in terms of the economic data, nothing has fundamentally changed, right? So here the big question is this just some wheeling and dealing due to the dollar strength and the weakness of the euro and euro GPB action, etc., and then this thing is going to resolve, or is this really the big next structural move to the downside? We'll just have to wait and see. I think that in terms of the bigger picture, if you look at it on the weekly right here, a lot of people will be looking for a very, very aggressive move if we break back below the 148s, right? So I think most likely the way the shorts are going to be looking at this in terms of a big cyclical point, simply because this is also, right, a very big zone on the weekly, is that if we break back below that 148, then I think next stop is going to be 144s and potentially lower, right? So I think still we have to respect this 150, 148. The overall outlook hasn't really changed on cable. So what I would say is, as long as from a daily and a weekly we do not close below the 148, I would not be surprised to see us trading back in the 155s relatively quickly. If we start to get daily closes, weekly close below the 148, then this will likely going to be very, very aggressive. So as we stand here, there's clearly the potential for a quick, 400 or 500 pips to the upside or the downside. So it's a really, really important level. So it's going to be very interesting to see how the market positions itself and how the market trades. So that's pretty much where we're at. So again, thanks a lot for listening. Thanks a lot for all those likes. I see some people been liking the videos a bit more, so really always great to see people appreciating the content. And again, let's see what happens. Slightly calmer week in terms of the data front, but there could still be very, very aggressive moves. Heads up for possible tape bombs out of Greece too. Let's see what happens, and I'll see you guys for London. By the way, remember everybody, we've got a time change in the US, so heads up for that this week, okay? Have an awesome one. Take care. Bye-bye, guys.